Hello everyone, welcome back to my YouTube channel. So I am Manashri. I'm currently pursuing my third sem at Sri Venkateshwara College of Engineering MBA, and in this video we'll be talking about one of the major subjects of finance, that is SAPM, Securities Analysis and Portfolio Management. And this is a finance subject and I am a finance and HR specialization student. And in this video we'll be talking about the investment attributes. So, majorly, what is investment? So, investment is an asset which will be a safe, secure thing for us in the future, where it will be giving us more revenue or appreciation or any such income for the individual. Here, appreciation refers to the increase in the value of the asset over a period of time. So we can say the land has been appreciated from 10 lakh to 20 lakh, or the motor vehicle value has been increased, or the building value has been increased. So all of this is nothing but the appreciation in terms of finance words. So investment is such thing where the appreciation of the value is being taken place, or the increasing of the value is being taken place. Nowadays investment plays an important role for everyone, because everybody has going for the secondary income, and that is the investments, and they make sure that the investment whatever they are investing gives them a greater level of greater level of greater level of income or appreciation in the future. So, for example, an investor may purchase a monetary asset now with the idea that the asset will provide income in the future or will be sold later at a higher price. So, as I said, will be one person will be investing on the land. Maybe he'll be purchasing the land for 10 lakh, and in the near future, maybe he'll be selling it at 15 lakhs or 18 lakhs, based on the time and the things what are being going on the real estate. So this is called as estimate investment roughly. So what are the key characteristics of the investment? So we'll be talking about them one by one. As I have listed here, the main characteristics or the attributes would be risk, return, marketability, and taxes. I think most of you have already known what are this. These are the major things which are associated with the investment. So first thing is return. Return is a major aspect what the investor looks, because every investor has to get certain type of returns when he is investing in a particular investment or a particular sector as an asset. So that is what his return is. So the rate of return is nothing but the income what he is getting, annual income for the whole year, plus the ending price minus the beginning price. So ending price is the recent price whatever it is being ended, and the beginning price is the recent is the last price, not last price, is the first price which he has purchased it, and divided by the beginning price, that is the first price what he has purchased. So basically this gives the return rate of return what he has got secure from the overall period, that is maybe a 1 year of 2 year or 3 years, based on that. So when you have there is a line here, a good rate of return on an investment is the first and the foremost condition on effective investments. So if it is an effective investment, then there must be a good rate of return. So that is what the return has been calculated. So the risk is always associated with the return. Here the risk means that the uncertainty of the return. Sometimes return is there is a saying, risk is certain and return is uncertain. Similarly, return is certain, risk is uncertain. So these are closely related to one another. We have to take, if we have to get one, the other also comes with it. If we take the risk, there is a return. If we go for the return, there is always a risk. So these are equally dependent on one another. So if there is a risk, there will be a reduction in the amount of the capital or the investment what we are being invested, and there will be a less amount of returns, and the loss of capital also takes place. So this can be based on the loss of capital, or delay in the repayment of capital, or non-payment of any of such case of assets, or variability of returns. Will be expecting a similar amount of return, but that will be that will not be achieved, or any such things, or some investments or securities such as bond deposits are almost riskless, others are riskier. So the government agents, government securities, or the bank deposits, whatever we deposit, is always very much is very safe. So this is called a zero risk, where the investors who are not ready for taking much risk will go for this option. At the same time, who the investors who will be interested in higher returns and who will not be worried about the risk, they may go for higher returns where it is always associated with a higher amount of risk. So the risk and return are always interrelated. The next one is marketability. So when an instrument is being sold or marketed in the market without a loss of money or loss of time, it is said to be of liquid. So here liquid is nothing but the immediate conversion of asset into cash. Suppose you have stock, you can immediately sell it and you can make money out of it. So stock is liquid. Suppose you have trade receivables, you can demand for trade the data you can demand for them and you can get the receipts. So this is again liquid. So this instruments are liquid. And apart from that, whenever there is an emergency, the user or the investor can always sell the instruments and the investment instruments, he can make money out of it. So these are liquid, and these can be transacted very easily, and the transaction cost will be there for this, and the minimum charges will be there. That is the agency or the app what you are using for the medium of exchange, the brokerage charges will be there like 0.2% or 2%, anywhere 2%, maximum 2% will be there on some of the mediators, and the commission will be charged. Apart from that, the price change between two transactions is negligible. Any of the two transactions are being made and the prices will be negligible. And the next one would be taxes. So taxes plays a important role. So on whatever the returns you are getting, the amount will be under taxable position. So few items which are a few users who have the tax benefits can always claim for it, and others would not. And one more thing is the initial tax benefits. The few dividends are being paid in such a way, few things are being paid in such a way that they are always getting after tax. So they are getting tax TDS, so already the tax is being deducted, and they can claim they can claim tax return on for that. And for some time, for some others, it will be continuing tax benefits. So on a periodic basis, they have to file it, and file the returns of from the investment, and they have to go on the filing of taxes for the infrastructure bonds and all. And other one is terminal tax benefits. Suppose the tax relief for the customer investor gets when he liquidates the investment. Until he does not liquidate the investment, he doesn't have to worry about paying the taxes. But once he withdraws the money from the particular amount or the instrument or the investment, he has to make the payment on the terms of his age or category or any of the things what has been made in the investment. So this is also one of the major attribute of the investment. And one more is the convenience. So convenience means the ease of investment, and while an investment can be made looked after easily, we consider it convenient. So when an investment is easier to make, then it is called as it is convenient. And there is an example for that. It is easy to invest in liquid equity shares compared to real estate, because real estate involves a lot of documentation and legal requirements. Here we are talking about the ease with an investment can be made and managed. So let me explain to you. We have equity shares. So when you are going to invest in the equity shares for the equity market, you do not need much documentation. That is, you may be needing the basic PAN details and your account details and other major details, that's all, and address proof and identity proof, all of that. But at the same time, when you're going to deal with the real estate things, here the things and the documentation will be a lot compared to the other one. So the equity shares what we are dealing, that is convenient for us rather than the equity shares or rather than the real estate. So this is what is convenience. Whichever the mode of investment is easier is convenient. I hope all of you have enjoyed and understood what the investment attributes are. If you have any doubts, please do let me know in the comment box. And thank you for the watch. Thank you for watching the video till the end. Please do hit a like button and subscribe to my YouTube channel. Thank you. Have a nice day. Bye bye.